So you have been following this series, though it's only 3 episodes long. We have covered quite a bit of stuff and quite a bit about stocks as well, and we probably have some losses and some gains. Like one of the stocks that we bought a month back, Keppel DC REIT, which deals with data centers in Singapore, the prices haven't been doing very well. Needless to say, I'm in the red and that's not doing very well. However, the purpose of this series is to show that even with a small account, one is able to grow a steady stream of passive income as well. So let's take a look at our account so far. So we have roughly a total balance of $1,649, and the dividends that we've collected last month was about $13.59. We have $9.59 from Keppel DC and $4 from STI ETF. So Singapore being tax-free. But nonetheless, the biggest loser is probably AGBU, which is also Keppel DC REITs. But so far it's only a paper loss and it isn't realized until we hit the sell button. So one of the questions that people ask all the time is, when is it a good time to buy? And regardless of how good or great the company is, everyone seems to always ask that question. And this is a mere fact that we as human beings are emotional, and more often than not, we don't want to hold the shorter end of the stick. Which is fine, you know, who wants to always be on the losing end? But then again, we have covered this in plenty of videos on this channel, and timing the market is almost an impossible task to do accurately and consistently over time.
It's not possible!
You might be lucky once, twice, or maybe 3 times, but once you hit the wrong spot, you might even tumble into darkness.
Hello darkness, my old friend.
So like many people out there who are chanting like GME or AMC, I hope they do make some money, but for me it's not something that I can stomach, because I might or might not have woken up with lesser money than I have, and that is something I cannot accept. So the problem I see with GME or AMC is that the fact that the business behind these stocks aren't functioning, but not in today's speed. For example, GME does physical games like your DVDs, etc. But if you look around, most of the games are probably in digital copies as well. Like your latest PS5, they have a digital version. So in my previous video, which I'll link in the description down below and in the cards, I'll share my investment strategy and how I plan for my money. So for this account in particular, I'm going for a very low risk approach, but at the same time providing decent gains over time. And if you do a quick Google search, you'll see that everybody has their own way of buying and everybody has their own opinions. But for me, once I do my homework of researching, looking through the business model and the financials, monitoring a little bit, I'm kind of ready to buy something. So right now we're going to jump into Tiger Brokers to purchase a stock. So if you're looking to get a low fee broker, I'll leave the links in the description down below where you can sign up with them and enjoy low fees when you're trading with the SGX stocks. So in the current portfolio, we've got Keppel DC, we have Genting ES3, we have ST Engineering. And what I'm going to do this month is to add more position into Keppel DC REITs. So before you scream, "You must be crazy!" let me share my thoughts on this. So like in the previous video when we bought Keppel DC REIT, it was an entry price of almost $3. And as of recording today, the price has dropped to about $2.70. This means I'm in a loss of about $50 to $60. So what do? We have kind of 2 options that we can do here. Number 1 is do nothing, collect dividends and wait for prices to rise. Number 2 is to buy more, dollar cost average out of it. And we will be dollar cost averaging this stock, and this in turn gives me 2 benefits. Number 1, I get more stocks and I lower my cost price. And number 2, I'm able to increase my dividend yield as well, because dividend yield is based on the price that you buy your stock at. So right after we purchase a stock, you can see that I have 2 orders that was open. I purchased 100 shares and then another 100 shares because I saw the price going down. And although my average price might not have moved a lot, I think it moved about 20 cents, but it increased our shareholding from 200 to 400. And this means our annual dividend has increased from $71.26 to $81.26. So we are making a little bit of gains and a little bit of small progress, but over time this will snowball and eventually enable us to grow a steady stream of passive income. So as we wrap up this video, do hit the like button, subscribe if you haven't, turn on the notifications, join us on Discord, and I'll see you in the next video.